And that sound means we are now live here on our YouTube channel. It's our halftime report, daily show where we go through the markets one step at a time, looking at charts across indexes, commodities, currencies, cryptocurrencies, individual companies, breaking down earnings news, talking about corporate news, economics, anything that we think is important for a trader or investor to digest and analyze during their daily routine so that you can better make decisions out there, more informed decisions, I should say. Welcome out. We've got a full crew here today. We've got Coach Matt running screens, running charts for us today. Matt, how are you doing, sir?
You know, Tim, doing absolutely fantastic. Excited to be here with the crew to break down the market activity this Tuesday.
And we've got Coach Mark as well, as always, providing analysis, insights, and the trash that makes cash. We're going to play here on a Monday. Marky, how you doing today, sir?
Oh, my goodness. I could not be better. I love these markets so much. I
thought
adore them.
Because it's not Monday, we got a reprieve from trash that makes cash, but
there is no reprieve from making money, my dear brother.
I agree with that. I agree with that.
Emily, the queen, how are you? You're here on a Tuesday, as always. How you doing, dear?
My day. Why is Mark here? It's my day. Why are we doing these things that he brings here?
Because other people like to make money, Emily. Other people like to make money. So, I got some good picks, but that's for an hour and 20 minutes from now.
You're talking to the queen. I don't think you understand the scale of her greed.
Well, then she should get out a notepad in about an hour and 15 minutes.
Queen, real quick, before we get into anything too big, how's the weather out there? I know the East Coast, you guys got hit hard. I know across Texas, we've seen weather storms as severe as we've seen in quite some time, this weekend. How's the weather in DC?
I mean, it's not as bad as Texas. Texas really has it bad, but I mean, it feels like we're in Denver here. It's like every other day we get something. We're just kind of getting tired of it. And there's another one coming on Thursday. So it's like the moment it melts and something else coming on the ground. So we're good. We haven't lost power. It's not been that bad. It was black ice over the weekend, but nothing too bad. Not as bad as Texas. Those guys are not used to it. So I feel for my fellow tackle traders that are out there in Texas. Hopefully they got their power back.
And I think Emily's kind of skipping there a little bit, boys. Is that right? You hearing that too?
Yeah, I was wondering if that was me or her, but
that's always the thing you do, right?
Listen,
yeah, I was like, is that mine?
Well, I started.
There she is.
Yeah, you always have that moment of.
It is me, right?
Who is it this time? Is it me? Is it you? It's all good though. It's all good.
Emily, that's what happens when you talk trash about my picks.
Mark sabotaging. Yeah. It's Mark sabotaging.
All you have to do is blame the weather. It's very simple. Just in fact, I can't wait later on this week to read the headlines about how first quarter GDP is going to be impacted by the weather. It makes sense for you to use the weather as the excuse for the internet as well.
That's right. By the way, if you've gotten out of most of the harm there, you're lucky because like you mentioned, in Texas, there's like 4 million people that have lost power in the last couple of days, rolling blackouts. We've got 1 million barrels a day of production of oil offline. So my thoughts and prayers are out there with anybody who's dealing with the severe weather. I'm glad to hear that, in DC, you guys are used to it. You can handle it. Same thing here in Utah, right? We're set up for big snowstorms and whatnot, but hopefully everybody out there in Team Tackle and everybody else is doing okay here today. Even Matt, you got a little bit of snow up in the Northwest.
You know what? We moved up. For those of you who don't know, we actually moved from Salt Lake City. We lived there for a very long time. We moved up to Washington just for a year, just kind of wait and have the kids see something, a different part of the world to a certain extent. Just didn't want to get too far away from Utah. How we got away from the snow? No, it's ridiculous. Like literally 6 inches on the ground and there's no snowplow. Like why in the Northwest do they not use snowplows? Use snowplow. I'm very confused about this.
And I think I'm hearing some audio on Matt's side as well. Mark, is that correct?
It is amazing that the two people who trash penny stock picks audio went bad. I'm just saying correlation, coincidence. I don't think so.
Maybe.
You're doing something, Mark. I don't know who you've got on. I don't know what deal you've got with Comcast, but you're doing something.
He's doing something right. All right, let's get started here today. And by the way, before we get into market action, I do want to announce and release our podcast from yesterday. Obviously, we podcast on Mondays. We've been podcasting on Mondays for about 7 years now, and no different here this week. SPAC mania was the topic and the conversation. Coach Mark kind of walked through the history and the detail of what, special purpose acquisition companies are, and kind of the euphoria and the interest behind the marketplace here in 2021 over the last couple of years that we've seen money flooding into this. Matt, I thoroughly enjoyed the conversation. Mark, it was great from you as well. Matt, talk about the podcast for just a second here. Can't hear you.
Here, I'll talk about the podcast while Matt's getting his audio fixed. It was a fun podcast. We did a market skyline, did a little game at the end with quote this. No surprise, Matt won again. But, the bulk, our main feature was on SPACs. Now, there's been a lot of questions about SPACs. And, people, when they first hear SPACs, they associate it with this huge, gigantic, speculative area of the market. And there's a lot of questions, a lot of unknowns. And, we just broke down what SPACs were, some history of them, how they work, some of the basics, so you can understand SPACs better. It's an area of the market I really, really enjoy. It's an area of the market that's treated me very well, over the last, while now. And we broke down just to get information for people on SPACs. It was a fun podcast. It was a good podcast. You should definitely give it a listen.
Obviously we do this every day, and I look at the markets every single day as a trader for the last 15 years or whatnot. The SPAC movement is definitely one of interest. There's no question about it. And just the capital injection through SPACs into the marketplace has created competition to the traditional IPO process. Mark, you did a really good job kind of detailing some of the history and the nature of where we are today. And even just, some of the success stories like DraftKings coming through the SPAC process, or, SPCE coming through the SPAC process. And obviously this movement's not going to go away. Maddie, I thoroughly enjoyed it, quite honestly, and I want everybody out there to listen to this SPAC conversation for sure.
Yeah, like I was going to say, and hopefully my internet holds here today, but it's I felt it was really, really good conversation. We got into just identifying what SPACs were, but what I love about the podcast sometimes, and I think what we did yesterday, is we just kind of started having a conversation, right? And that's where I love that type of content, where unlike a professional PowerPoint presentation where you have that agenda and you go through those bullet points and you want to make sure you capture the essence of the conversation and make sure you're teaching in the right capacity, all that. I just love it when we have conversations, just a natural, normal conversation. That's kind of what I felt we had on SPACs yesterday, and Mark did a great job detailing what they are, the need for them. I talked a little bit about the why they're showing immense popularity over the last year. And like I said, even though SPACs they're nothing new to the market, they've been around since 1993. The popularity of them though is, and I just feel like with how inefficient the IPO market has become over the last two decades, really. The IPO market has simply evolved from what it was in the 80s and 90s and even into the early 2000s. The IPO market from Facebook on in 12 on has been, to me, disconnected from reality. And if you can make the process more efficient, direct to market, give Main Street the same type of transparency and opportunity as, say, Wall Street, I think that's a more efficient process, and I think that's a more transparent process. And so can SPACs lead to that? I'm interested from a macro level as well from an investing level. The conversation increased my interest specifically, and I said this at the end of the pod, and I'll say it here. I just wanted to thank Mark for it, because he opened my eyes to a little bit of that opportunity in that space.
Yeah, definitely. I dropped the link to the podcast in the chat. Make sure that you go and listen to it. If you're not yet a podcast subscriber, you can find Trading Justice on any one of your podcasting apps and subscribe and download those podcasts. Let's get down to the market here, guys. We had a day off yesterday, in terms of market performance. The market had the 3-day weekend with President's Day. We're now opening the market for the first day of the week. Initially, price action was up a little bit. We've now given that back. We're pretty much flat to even here across most indexes. Matt, this is on the backdrops of earnings season. season mostly wrapping up, other themes that we're still waiting on, like stimulus, but the trends are still intact here, and we are still nil. Even intraday, we just pushed another all-time high. Matt, what is your read on the price action in the stock market?
Well, I mean, the price action on late Friday kind of broke out of its trading range. You can see this when you drop it down into the intraday level. This is kind of late stage coming into Friday here, and you saw that kind of break out of that range coming into the last part of the market on Friday. Follow through with that with the futures market maintaining its price levels coming into the Sunday open. You see that right here, the strength of the breakout on the Sunday futures market. Monday you fade throughout the entire day, and you're seeing a little bit from an intraday perspective, at least not from a daily perspective. We haven't seen those pivot formations yet, but from an intraday perspective, you are seeing a little bit of that, what we call the Cody special, right, in the halftime report, where you see the breakout and then you have the snapback retracement coming back in to test the breakout channel. And typically that Cody special is done on that daily chart where you get that 1 to 2 day pop. Let's come back to the daily chart here. You get that 1 to 2 day pop. It establishes a breakout range, and then it comes back and retests that breakout channel. You're just seeing that same type of pattern develop over the last 24 hours or so, but it's really just done on the intraday. And so I don't think you're not right. The cash open wasn't strong. Here it is right here. The cash open wasn't strong, but all you're doing is testing the breakout channel at 39.20 that you established on the breakout of the Sunday futures open. So we're at a fairly important intraday level right now, testing that 39.20 level. If it breaks, you're probably coming back down into 3900. But there's nothing too concerning here from the chart. You're just testing the old breakout channel from an intraday perspective right now.
Mm-hmm.
I don't think it's modifying the sector rankings at all right now.
Yeah, and we'll go through the sectors here in just a few minutes. We do that always first show of the week. Obviously, we take a look at the ones that are at least impacting and making a move. Energy and financials looking pretty good here on a Tuesday morning as well. But Marky, how are you reading this price action? Obviously, stocks are up near high. We continue to push. This is after a week of basically dojis, but we had price appreciation on the weekly candle. What's your read here, Mark?
I mean, once again, I think it's still healthy, right? Like, try to give a push in the overnight, nice 3-day weekend. There's no big, huge bearish theme out there. It had a really nice 2-week stretch, really nice 2-week stretch. As long as that old breakout level holds, as long as moving averages hold, you're going to keep climbing up, so, I mean, I'm just happy it's not running away and going parabolic. I mean, I like slow, grindy trends. I like it. I like it a lot.
Mm-hmm. Go ahead, Matt.
Well, it's true, but we also I like slow, grindy trends. Everybody does, right? They're consistent. You can approach them in a variety of different ways. Whether you're cash flowing directional, they do create fairly easy trading environments on those slow, methodical, grindy, 45-degree angle, type trends there. The one thing that I will say here, and again, I'm not too worried about the market here. This is a doji after a breakout. Like, just have some perspective there. But the one thing I will say is that when you're looking at these run-ups here, even the run-ups here, when you're looking at those run-ups, they are dominated by the market showing strength on an intraday perspective. And so you see it close towards the high, 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 close towards the high. You see it all throughout your upward movements. Showing a little hesitation on the breakout is a little concerning, but again, all you're doing so far is testing the breakout channel. We'll see how it navigates the 39.20 range. But for me, it's a general bullish market in a general bullish uptrend with a breakout on Friday. You got to be looking at a buyer this week.
The number one theme behind the market has been earnings catalyst, at least holding the market up near the highs for quite some time. We talked about this on the podcast yesterday, but I wouldn't mind, Matt, giving some context to what you kind of dug into some of the data earnings. You go through these on a daily basis with these companies, but we've had most of the market reports so far. So what have we learned? What have we learned so far?
We have, and I typically do this on the Monday, obviously here at Tuesday as we start the week, because as you go through earnings season, you first start with the financial stocks, and then you start trickling in communications and technology stocks. You start sprinkling in a little discretionary, and then you start adding some staples and energy. And so, yeah, as you go through earnings season, because of the way industries and sectors report, you start to see kind of that story develop through earnings throughout the week by week type analysis. And right now we have 74% of companies in the S&P reporting earnings. And when you get to that level, we're pretty much done with earnings at this point. We have a lot of companies still reporting, but not a lot of big names reporting. We don't have a lot of major market drivers. And so for this week in earnings, your big names are Walmart, Shopify, Baidu, Applied Materials, Twilio, Roku, and then you have some mining stocks, some very, very important mining stocks in Newmont Mining and Barrick Gold. But so you still got some important reports, but you don't have that one report that can really drive the market. Walmart's big company, it's Disney level report, but I can promise you I'm not going to spend as much time on Walmart's report as I would say at Disney, because Walmart's really, really simple. It's a consumer staple driven company. They're going to rock into, oh man, they will probably be the first company to hit that 1 trillion revenue mark. But for now, they'll be reporting 120, 130, 150 billion in revenue. I haven't done any analysis yet on it, but that's just what Walmart does. So I don't see Walmart as one of those major drivers of the market. Can it have an impact on the discretionary space? Yeah, I do think it could have an impact on both consumer discretionary XLY and consumer staples XLP. But I'm not sure it could have a major market driver the same way, say, an Apple or even a Disney last week could have a little bit more of an important report in my opinion, and that's just my opinion. But so we are towards the not even the back half. We are pretty much done with earnings, and so we're just going to be doing spot up earnings duty throughout the next week and maybe a little bit the week after. But as of right now, we have 74% of companies reporting earnings. Of that 74%, a whopping third highest ever, 80% of those companies are beating the EPS. That is above the 5-year average at 74%. And of the 80% of companies, 80% of companies that have beat the expectation, they are beating on average by 15%, which is a whopping 9% higher than the 5-year average of a beat of 6%. With the EPS growth and the beat of 15%, on average beating of 50%, with 80% of those companies beating, you're seeing what you've seen now, and this is the important takeaway. Earnings growth is back. You are now coming in at 2.9% earnings growth year over year. That is the first time we have seen earnings growth in the pandemic. And this is much faster in the recovery than we anticipated it happening. We anticipated this happening, unlike the labor market and some other key metrics from an economic perspective that are going to take a long time to kind of heal, if ever, quite frankly, specifically regarding the labor market. Earnings growth came back, and it came back faster than anticipated. If we were here by the third or fourth quarter of this year, I would say that's a positive. We're here by the first quarter, and now the question is, can they maintain what they've started? It's been a very, very impressive quarter from an EPS perspective. And you have 7 sectors out there in the market that are now positive. You have 4 sectors in the market that are still showing negative earnings growth. Of the 7 sectors, we're talking materials, energy, we're talking consumer staples, consumer discretionary, you're talking technology, communication. Some of the laggards out there, energy, industrials, utility stocks. We know those are the areas of the market that have lagged the recovery, and so you're seeing a lot of positive type strength coming out of earnings season so far. From a revenue perspective, 78% of companies are beating the expectation. That is well above the 5-year average, and they're beating their revenue expectations by 3%. Now, the 15% that beat on average on EPS expectations, that is the third highest of all time. That also matches the third highest rate at 80% in beating positive expectation. Now, the 3% in revenue growth represents the highest revenue growth of all time. Okay. And so that's where we're at in earnings season. Now, if we maintain those throughout the next week and a half, those are going to be some historic numbers. Typically, we fade throughout the back half of earnings season, so it will probably come into that 78 and 75%. But overall, a very, very, very good quarter from an earnings perspective. Now, the one thing I will say here, and y'all can take this for what it's worth. This earnings season is by all metrics a very, 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 very good earnings season with some historic numbers on it. Okay. To put it into perspective, though, in the last 3 months, both the 12-month forward PE ratio as well as the Schiller PE ratio both went up about 10%. So from a valuation perspective, despite the historic numbers, we're actually more overvalued today than we were before we started earnings season. And that's what happens in bubbles, guys. That's just what happens. But it's hard to see that continuing. Either one, price needs to contract, or two, earnings needs to get even better than it was. But again, the takeaway, earnings are back. Earnings are better than anticipated, quicker in the recovery, but is causing a little bit of concern from a valuation, because valuations are actually more stretched today than they were before earnings season.
Mm-hmm. You know, it's amazing to think about that, because I saw a fund manager survey from Bank of America. They put it out every quarter as well, where they talked about what a lot of these Wall Street managers are doing, Matt. And even with all of that you just talked about, they still have the lowest levels of cash since 2013. They're basically all in on risk assets is the takeaway from the whole thing. And so the market continues to buy, the market continues to push. They're all chasing it up here. And obviously the valuation reminder is just a good reminder, as always, to know kind of where we are from that fundamental perspective. The market loves the quarter, but now you got to ask yourself, okay, where do we go from here?
And price in the short term was justified. You had a very, very robust quarter from a price performance perspective. And you know, when you look at this slow, methodical, grindy market in the last, couple months here, you haven't seen great price appreciation. But when you take into account the quarter is all of this back here. It's not really this right here. They're reporting for this. This is what the current price has done. And so earnings just simply hasn't caught up to price yet. And once again, price can come down, earnings can come up. That's how PE ratios work. So I'm not saying, hey, watch out below, the market's going to tank. I'm just a gentle reminder, valuations are extremely stretched right now. The market is a general bullish market with a general bullish flavor, but we are stretched from evaluation, and we are more stretched today than we were 3 weeks ago before these amazing earnings reports.
Mm-hmm. Emily, come on in here.
Just think about it like this, guys. Without these earnings reports, we would have a different conversation today with where the price is. So the price is justifying the previous behavior is what it's doing. If we didn't have that type of response out of the corporations, we're not talking about a market of 39.31 right now, quite frankly.
Mm-hmm. Mm-hmm. Emily, as you attend the halftime show every day, you trade every day, you've been trading for a long time. As you hear this kind of data where okay, markets have been strong, they're up near high, but we've got valuation concerns. How does it impact the way that you trade? I mean, are you staying in some cash, still making sure that you're balanced between delta and theta? What's your read on this market conditions, and how are you approaching it?
Yeah, so you obviously have to have that caution, in the back of your mind, right? So your daily routine, really, my daily routine does not really change as much, but you keep an eye on those price levels, you keep an eye on those, major support levels, and then you act accordingly. But for now, on a day-to-day grind, it's just business as usual. As the market keeps giving you these bullish trends, you just take them, and then once that's no longer the trend, then you react to that and you plan accordingly. But for me, I haven't changed my perspective. I still have some cash obviously set aside. It's just part of my portfolio design overall. So It doesn't change whether the markets are bearish or bullish. It's just what I have in my cash position. But as the markets keep giving you what they're giving you, you just trade accordingly. I'm, mostly doing cash flows. I am starting to get a little bit more directional as those plays show up on my radar. But For the most part, I'm still trading the same way I normally trade. Now, am I missing out on some good returns if I were directionally trading? Of course, but I'm not bothered by that. I'm comfortable as to how I trade, unlike Mark, who just likes to, trade SPACs.
I can't wait for trash that makes cash later today. I feel like I got an ally on my arm with Queen there. But I'll just say this, guys. We've all known throughout the entire pandemic how overvalued the market was. Like, that's not hard to understand. But it's how Wall Street is going to see the overvalued nature. Are they going to see the fact that, man, this is absolutely crazy train and something has to happen for valuations to come back down to some degree of normalcy? Or two, is earnings going to continue to improve to offset the valuation concern? And when you come out of a robust earnings season like we just did, I promise you Wall Street's going to be looking at the latter, using the performance and the anticipation for the future as a way to justify the current valuations. And that's that's not even probably, that's how I see it as well.
Mm-hmm, mm-hmm. Mehdi, you want to do sectors now, or do you want to do them after commodities? Either way.
Totally up to you, bro.
Let's just kind of flash through them. As we're talking about this earnings season, the whole thing, it makes me think about communications, which were absolutely monstrous across their sector throughout earnings season, as well as some discretionary numbers,
And quite frankly, if you look at all of earnings, the best earnings came out of communications, and look at what the price performance has done ever since earnings season, right? That's how important earnings season is. Communications was a laggard before earnings season, has had the best earnings season.
I think it's number one, right?
Had the best performance from a price perspective. Yep. Again, earnings are important, right? Companies making money is important. And, a lot of these communication companies can thank, I was going to say they could thank Reed Hastings and Netflix, but I think they can just simply thank the market for saying, hey, we just appreciate Netflix thinking about the future. So there is that. But yeah, communications has been an absolute juggernaut during earnings season, and it's backed by their performance too. I mean, I do not think their technology's up there too, but both communications and technology are in that 90% beat range right now. Just absolutely very, very impressive out of both of them. But when you're looking at this from a technical perspective, I think a lot of people coming into this week, and y'all can go check the Tackle newsletter that Marquise does such a wonderful job with on a weekly basis to get the full detail and the video and the write-up and all that. And Gino might have been doing it this week, but typically Marquise does it. And a lot of people were anticipating, the breakout in finance. You had a little bit of consolidation coming into the breakout channel. In the scatter report meeting last week, I can tell you every single one of the coaches were just geeking out over the potential energy and financial breakouts. And, which one was, we sat there and had a 30-minute conversation on which one's sexier, a breakout in energy or a breakout in finance. And I'm like, hey guys, we are talking finance and energy here. So, I wouldn't exactly attach sexy to those areas of the market. But, there we were on Friday having a massive debate over finance and energy. And, finance shows you, what, we got the consolidation, we got the trigger, and now we're breaking out. And, coming into the market, we were anticipating that breakout. We got the breakout. Now it's just a matter of trade accordingly. This is going to confirm today. It's just a matter of how you want to approach it. I know the Queen, Coach M there, she's going to be all over finance this week. She's probably staring at her Bank of America chart right now, just saying, just go, bank, just go. You know what? I've given you a lot of money over the years. It's time for you to bring it home, Bank of America. But others might be looking at JP Morgan here today saying, you know what? You can take your boring old Bank of America and let me, trigger against a perfect breakout. Others might be looking at Goldman Sachs here today, or Bank of New York, or whatever it is, right? Pick your favorite thing. When you got a breakout, a lot of that space is going to be following with it as well. So, financial starting to set up, energy also setting up against that very, very good breakout of 45. Very consistent on the trigger there at 45. You got a little bit of chop here at 47 that you got to navigate. But outside of that, the the thing about this energy chart, even more than financials, is there's not a lot to the left of the chart to really be too concerned about here. You got the 47 handle that does get confirmed with the pop up on the recovery, and then that coincides with that resistance over here on the snapback retracement, kiss off the 9 during the end of the world moment. And so you do have to navigate the 47 handle, and that is certainly going to be target 1 on the breakout here. Above 47 though, that's what you're probably getting excited about here. Not a lot left of the chart. 47 seems legit. 50 seems like a pie in the sky in the short term, but nobody would be surprised a couple weeks from now seeing the sector hitting into that 50 level. So breakouts in both energy and financial here today. Looking at the two boring areas of the market, utilities and real estate. Utilities, really nothing to see. 45 to 45 on the scoreboard. You're in wide range neutrality. There's no breakouts here. We are seeing some downward movements in price. Maybe we get concerned at the 200-day. Maybe you get concerned at 57.5, or maybe you just don't care about this space because it's utilities. So let's move on. Real estate, a little bit overextended coming into the top end of the channel. Look for a pullback, some degree of consolidation. Not a great area to trade in, more like kind of very similar to utilities, more cash flow investment, park money, get that dividend, because again, and I'll just ask guys, what sector pays the highest dividend? To tackle trading, halftime crew. What sector pays the highest net average dividend? And you might think utilities, and you might say staples, and they would both be close, but it is real estate. So that's what these areas of the market are for. Trade accordingly. Staples, very similar. So you're seeing maybe a little bit of strength in real estate, maybe a little bit of weakness in staples and utilities, but overall, these 3 areas of the market are more cash flow driven, more dividend, right covered calls, not looking for appreciation there. And I'm not seeing anything there from a trading perspective either. And quite frankly, for the scouting report meeting on Friday, I didn't even scan real estate, utilities, or staples because I literally could care less about those 3 sectors right now. So now getting into the twins here, communications. And again, the 2 best performing earnings sectors were communications and technology. Both had very, very, very impressive beats. Communications is very overstretched in the short term. We wanted some consolidation. It just wants to fade. We're most likely, now again, there's lots of stock picks out there. Go look at the options report, go look at the stock report. There is a bevy of picks to analyze over there. So it's a stock pickers market, but from a sector perspective, you're not seeing any new trigger, which means, man, wait for that 4% pop in communications. This feels fading action. It looks fading action. And so general bullish theme, no real pattern here. No real pattern where you can say, look at that pop you have on energy. Look at that pop you're having on finance. Trade accordingly. Throw a dart, you're going to find a trade. Not the case in communications. One of the stronger sectors out there, one of the better trending sectors out there, and certainly one of our highest rated sectors to tackle trading, but there's no new trigger. It's just a fading action, which means you can go about your stock picking in communications. Technology, XLK, very similar. Like I said, these is 1A and 1B when you're looking at the market. Discretionary, fairly close third to that. Same type of trend and pattern though, just a 45-degree angle fading action. The only time it's even remotely showed any weakness, it got gobbled up at the 9 EMA. This is an area of the market, as with communications, a lot of money's being made in this area of the market in the short term. Nobody's really selling. Everybody's just kind of fading here. So again, general stock pick sector right now, general fading price action, not bullish euphoria, I would say, but not a lot of fear to a certain extent. So looking at technology and communications, both in general bullish uptrends with fading action, and going to be a stock pickers market until we see a pattern develop in those 2 areas of the market specifically. Let's take a quick peek at basic materials here. Two very important earnings reports coming out this week for materials, and specifically on gold, as gold looks to fight that $1,800 support channel. Our Newmont Mining and Barrick Gold, not going to have that big of a deal though on the sector. What I'm seeing here is the strength of the market, and the strength of this area of the market is the chemical space. The chemical space, they are starting to set up for breakouts, retracements. Pretty strong area of the market over the last year. Showed weakness early in earnings season, little profit taking. If you guys will remember, in the chemical space, a little bit of profit taking on beats. A little bit of profit taking on beats. They're now starting to set up for those secondary moves. So keep an eye on the chemical space. What's really adding to this though is you got some of the areas that are fighting for support where the chemical space is breaking out. The sector itself breaking out here today of that little, I don't even know what we were calling this in the scouting report meeting. It was the fake wing or something along those lines. But all of us love these types of secondary movements where you have this deeper pullback, and I'll explain the secondary movement I'm talking about. You have this deeper pullback here where it violates the momentum trigger of the 9, the standard bullish retracement at the 20, and then, oh my goodness, you better fight for that 50 or we're all getting out, right? It gets under that 50, we're all done, right? Well, the secondary move is in this recovery. This is really tough to buy in the face of this. It's really tough to say, well, yeah, it failed at the 9, it failed at the 20, it failed at the 50, but by God, I'm going to push my chips in right now, and this is the time it's going to work. That's really, really tough. What is less difficult is now seeing it reclaim those moving averages, using those moving averages as support, and then breaking out and thus seeing that next leg up. So you do got a little bit of a triggering happening here in the materials sector that could be very good coming back up into the 77 handle. So keep an eye on this just in the short term, this 74.40 level on materials. I think that's important to hold for the short term if some of these trades do manifest themselves in the material space. Industrial, this for always will be either a 35 or a 40 for us at tackle trading. It's a 35 for us if we're front running the breakout because we love the potential breakout. It's a 40 for us if we don't. For me, I love the consolidation coming in over the last week here, fighting against that breakout. We know the 90 handle's important. It played defense against it all week long. If we can get above that and close above 90.75, this is an area of the market you should look at. Absolutely 100%. And sometimes, guys, the market does is it lulls us to sleep. It lulls us to sleep. We look at an area of the market, we're like, oh, wow, that's going to break out. Let's all look at it. It doesn't break out. We get bored. We move on. We start talking trash and penny stocks and the underbelly of the market. And then all of a sudden, Caterpillar breaks out and nobody sees it because they've got lulled to sleep based on the sector doing nothing. Wake up for everybody for the industrial space. We're starting to see life in the industrial space. And again, I know I sound like a broken record on infrastructure, but I still believe it's going to happen. So wake up on industrials here. You're threatening a breakout in Caterpillar. We're seeing good price action in John Deere. I know we do have earnings coming yet, but you're seeing potential breakouts in a lot of the stocks that make up the top of industrials. If industrials can get above that, and it's not too difficult from an analysis perspective. We know the historical range right there. You know the high. Do you choose the wick at 90.88? Do you choose that base? Pick your poison. But if industrials does break out of this range, guys, you're going to have some pretty good trading in industrials. So keep an eye on that. And then the discretionary space, XLY. This was an area of the market that got a lot of people excited in the scouting report meeting on Friday, guys. We have yet to confirm, but this is one of those Cody specials. Breakout, you're overextended on the breakout. We do not like overextended breakouts. Wait for the snapback. You got the snapback now. It's just a matter of do you trigger, do you confirm, and how aggressive do you want to treat the discretionary space? Because out of all the areas of the market right now, energy and finance breakouts really good. Communication, technology, fading patterns give you a lot of confidence. In the discretionary space with the bull flag kissing off support, those are the area markets of focus this week.
Mm-hmm. Love it. Love the breakdown. And by the way, I'm very excited about those industrial potentials. That cat chart you showed, I mean, it was on the report over the weekend. We were excited about it coming into the week, obviously, and it's actually performing very, very strong here to start on a Tuesday. Let's move through commodities next and bring Mark in for the heavy lifting on this. Mark, let's start with crude oil. There's a lot of chatter. You even mentioned this. You used this phrase on the podcast yesterday. I want to get your clarity on it about a commodity super cycle that people are starting to talk about. Now, I don't know if that's just, the linguistics that they're using in the sewing circles, as you call them, getting people excited about commodities. We've got gold.
Does commodity super cycle, is that code for hyperinflation?
I think that's what it
It
might
is.
be.
Is that basically what they're talking about?
If you Google synonym hyperinflation, you see commodity super cycle.
Okay. Mm-hmm. I just want to make sure I was on the same page as you were, Chuck, before you started.
Yeah, Marky, walk us through the commodity market if you can. I mean, what are you seeing here? What do you mean by commodity super cycle?
And I really mean this. Sometimes I use hyperbole and exaggerated thing. Like, I don't know how you aren't upping the percentages in your portfolio in commodities. Listen, we all have our gold, right? And we're going to do our gold, and we're going to trade our gold how it is. Bullish on gold, even if it is the most boring part of your portfolio right now. But there is just, and I've mentioned this about the sewing circle off and on over the last month, just extremely bullish on commodities. I mean, like, as much as I've ever seen in 10 years. And I mean, you're seeing it in the copper breakout. You're seeing this in crude oil doing its price action. And I think we've really been given a gift on energy stocks. A lot of those patterns are really, really sweet. That GameStop volatility week created a little pullback in energy, even though oil really didn't pull back. Oil's breaking out. There's lots of room to run in energy stocks. It is just an area of the market that if we do suffer inflation, if you look at historical, what does well, and I shared this chart with pro members on the Sunday halftime report 3 or 4 weeks ago, copper, crude oil, do pretty good in those environments. And I think you're starting to see people get really excited about those trades, those areas. And it's just one of those areas that I know I'm upping my allocation in different commodities. Now, you never go 100% in anything. You never go 50% in anything. You have your Bitcoin, you have your gold, you have your commodities, you have your tech stocks, you got your trading plays. I mean, you have this portfolio that you try to keep balanced. But I do think upping a few percentage into commodities, and of course, we can always swing trade, but I'm talking about position trading throughout the year, looking at some longer term plays here.
Mm-hmm. Well, in the metals market specifically, this copper chart has been extremely strong. I mean, the breakout's been holding. I kind of like the way silver's been holding up here on the development. Let's take a look at a couple of these charts here, Matt. Give me a quick technical read on them. Go through the metals first, if you can.
How much breakdown do you want me to do technically?
Just simple one. Flash
gold sitting at support, fighting for its short-term lifeblood.
Mm-hmm.
Okay. Copper, good momentum coming off that neutrality. We talked about it all last week in the breakout. Formed a little bit of hesitation candle with a hammer breaking out of 380. I don't love the short. I don't think this little hesitation candle creates a new trigger here. I think that's just the continuation of this strength here, but obviously very, very, very strong. Copper's very, very strong right now. Many people should be happy about that with their FCX. Platinum, palladium. Platinum isn't pulling data in the virtual trader, but platinum's been very, very, very one of the better performing metals over the course of the short term. Palladium stuck in the mud.
Mm-hmm. Mm-hmm. By the way, we were talking FCX, CCJ, some of these commodity plays. There's a lot of good stocks out there that are based in commodities that are actually looking really, really good. CCJ around the uranium one was up.
And Michael Burry of the Big Short fame, he came out and basically gave a 2 thumbs up to uranium. And uranium is one of those areas of the market.
You know who else gave 2 thumbs up to uranium?
Who?
Dirty Sexy Money Tackle Trading.
Sexy Money Tackle Trading. I mentioned that last night with the pro members. You know, and I was like, listen, this is the only year you're probably in the history.
It's a good thing Michael Berry watches our Tackle 25.
You know, are going to have our uranium mining company on Dirty Sexy Money. But, you know, it is one of those things that it just coming into the year, there was this sense, right? Clean energy. I mean, the people that push uranium are like, ain't nothing cleaner than uranium. Michael Burry commented on that as well. You know, it's just one of those areas that you could see a run. I mean, you have been seeing a run the last 5-6 sessions. Not exactly a great technical entry after, you know, if you miss the breakout. But I think it's one of those things you push on your watch list. You know, and some of the smaller companies, well, like if you pull up DNN, I mean, there's a lot of different uranium mining companies, and their technical setups. This was going to be last week a potential tries to make cash terrible entry point, but there's a lot of different uranium mining companies. Tim brought up quadruple U's a couple weeks ago. There's a lot of different ways to play uranium miners. If you want a list of uranium mining companies, you can email me at team@Tackle Trading. And if you're not a pro member, I'll set you up with a free pro trial as well. Or you can go to the store tab at Tackle Trading. Go look, or store tab, sign up for that 15-day free trial.
You know, Tim, I just put 2 and 2 together, bro.
This was what was it? Is it 4? Is it 5?
No, CCJ,
7?
CCJ on Dirty Sexy Money.
That's right.
Right?
Yeah.
Yes.
Something like clean energy, cleaning up dirty, sexy money.
That's right.
Ah, there you go. There you go.
But does that count as a dad joke?
I see what you did
That's
there.
that is a stock market dad joke.
Does that count as a stock market dad joke?
That's inside baseball dad joke. But I love it. It made me laugh. I like it a lot. We got to take a peek at crude oil, though, and have a discussion around that one. Obviously, the metals, we've talked about them a little bit here today. Crude is moving a little bit, but really, I mean, guys, weather-related drivers in crude, natural gas, these type of things, they don't necessarily sustain themselves that way. We have 4 million people in Texas without power. We have 1 million barrels of production offline. But everybody here knows that production will come back online. The strength in crude is based on the strength in crude. It's been, developing this chart now for several months, and that breakout of 54 was strong there. Matt, now that we've clipped 60, little doji candle, are you concerned about being range up here?
Yeah, I'm concerned about being range up a lot of times in crude oil when it goes from $35 to $60 in 3 months. Yeah, that's normal for me.
Mm-hmm.
Yeah.
So do you avoid energy plays because crude is range up?
No, of course not. I mean, it's just a matter of, do you see this? It's really how you see this here. Okay. Do you see this as a high base with a retrigger, or do you see this as a hesitation that just hesitates this? If you see this as a new trigger, no, you're not overvalued against the short term. It's just it's a subjective analysis at that point. But when you only have a 2-3D hesitation, that just feels like a momentum trigger that is continuing this movement with not a new trigger. At least that's how I see it. I think for a new swing trade, when you're talking about how do you trade it, there's a million ways to trade crude oil. Momentum right now, I don't think there's a new swing trade, but there's momentum, there's day trading, there's credit spreads, there's 1,000,001 ways to trade it. Specifically, tighten up that question a little bit.
Mm-hmm. Yeah, and I'm still targeting energy stocks, obviously. I'm looking at, many companies on this list. In fact, one of my trash that makes cash picks, I always try to bring one, might be an oil stock. We'll take a look at it later in the show. But Exxon Mobil, XOP, we had a lot of energy on the option report over the weekend as well that Coach Tyler added to our report and did the video on. Let's take a quick peek at the dollar. Dollar's kind of holding CCIV. They're talking about it. Yeah. The dollar kind of just hanging out, sitting on support. Matt, I don't know if you got anything to add to the dollar here today. There's nothing there. UUP, and then
it's a dollar. I don't have much to add.
All right, let's talk Bitcoin for a second. Then, Marky, what you read on the crypto markets? We're up here pushing near $50,000 per coin. Obviously, a lot of corporate adoption stories over the week. We talked about it on the podcast. Bank of New York Mellon, MasterCard. Canada announced their first Bitcoin ETF that they're giving regulatory approval to. They're going to be moving towards that. A lot of good juice behind Bitcoin here, Mark. What you read on the chart and the news?
The Bitcoin crowd is absolutely in a frenzy fervor right now. you got to go to technicals. And I think that's the only way you can play Bitcoin right now, knowing that there is going to be huge, massive swings, right? This is, I mean, we ran from 42 to 29 to 29 to 51. I mean, get used to the swings in Bitcoin. And I think you look at breakouts after consolidation patterns, and you look at pullbacks, and I think you apply technical analysis, and that's how you play crypto right now. Knowing that the swings are massive. The swings are massive, but I think technical analysis is going to be your guide from crypto for the rest of the year. And then just, you find your strategy to play according with it. The corporate adoption theme, I'm totally bought into, but I also know that there's going to be massive wild swings. So, I know how I play it, to each their own, but I think you use technical analysis here religiously in your decisions on crypto.
After a huge move from 30 to 50, you got to like the hold up here, obviously. It's trying to consolidate. The longer it consolidates, catch up with those MAs, set up a high base pattern. You could get another technical setup, but until we get that setup, we got to be patient with that if you're looking for new entries from that regard from a trading perspective. Matt, anything in that chart grab your attention?
No.
Yeah. Let's move into stock talk then, and let's have a conversation about a couple companies and earnings. Got a few corporate news items. Emily's got some stocks she's been looking at. We're going to play a little game of Would You Rather, and then we've got our what are we calling this now? Trash that makes cash, that we do once a week on our first day of the week that Mark has got some picks on a little bit later in the show. Let's start with earnings roundup, Matt. I know there's only like 1, 2, or 3 stocks that were there.
I'm going to do this fairly quickly. No major companies reporting here today. Just going to quickly go through this. PLTR, not LPLTR. Okay. Palantir here reports 7 cents against 2 cent expectations, so another beat on EPS numbers. Revenue came in at 322 versus 300 against the expectation, and the reaffirmed guidance. That's all I had on Palantir. I don't follow the stock, don't care that much about the stock market. I know you do. Do you have anything to add on Palantir?
Listen, I love Palantir at 14, 15, 16 bucks.
You might get that opportunity. Let's just
I would love that opportunity.
YNDX here. Yandex comes out and reports 3 cents a share versus the expectation of 15 cents a share. Revenue came in at 969 million. They did not provide an expectation. The 69 million represented at 16.1%. Quite frankly, I don't have the context to understand this. The miss on EPS should have got sold against the price where it was. That's all I had to.
Mm-hmm. Obviously a very popular company from an emerging markets perspective. It's sitting near the all-time high. So the numbers don't give you that much concern, but it's kind of a head scratcher. Is that fair?
I want to make sure. No, they are concerning.
Okay. I wanted to clarify that. Yeah.
They missed, and the price is up 15% in the short term. Should have got hit. So to me, I don't trade Yandex. So yeah, this one you wanted me to get, so I'm just wondering if you had anything to add.
No, just it looks like it was breaking out, kind of holding up near the high. Just had some interest in the technical chart and
it's a miss. It's a miss. I would hesitate to chase anything on the Yandex if you're looking at it.
Gotcha.
And then CVS here. CVS comes out, reports $1.30 against $1.24. Revenue came in slightly above the expectation at 69.6 billion. It always amazes me how much CVS produces from a revenue perspective, but they were extremely strong on their pharmaceutical sales, and COVID-19 testing had shown them a pretty big increase in revenue as well. But getting pounded here on the cash open here today. Keep an eye on that 70 handle. That breaks, it could get ugly in the short term. 67.5, 65 on CVS. This is a company that on a miss, and this isn't a miss, it's a very boring average report at the top end of the chart, but on a miss, CVS can get butchered pretty aggressively. Keep an eye on that 70 and watch out below if it does get clipped.
Mm-hmm. Now, obviously, CVS is one of the institutions that's receiving the vaccine from the Biden administration. I read a report on that last week. And
the effort I'm going to put in on Palantir, Yandex, and CVS are slightly less than Disney. I'm just throwing it out there.
I could not read that from the enthusiasm in your voice.
Let me talk about Yandex.
Tell me more about why NDX.
Yes.
Oh,
I did the Lord's work today. Let's move on.
You did. All right, a couple of news items, then we're going to get into Emily's picks, then Cash That Makes Trash. Quick ones, Astrazeneca, one of the leading candidates for vaccine over the last year. We've been following this news story. Their vaccine is obviously a little bit less effective. We went through the data and the numbers. They got World Health Organization approval for the global vaccine, and actually that's going to be very, very important for vaccine rollout globally, not in the U.S., not expected to be a popular one here in the U.S. And then Facebook, another one that I was interested in here today, they're going to launch a smartwatch. It looks like to compete with Apple's watch. They're getting into that part of the technology. There's little information about when they expect that device to get out, but it looks like they are moving into that product part of it.
Hey, who wants to wear a Facebook on their hand? Anybody? Did anybody demand this product out of Facebook? Like literally anybody?
You're not going to be the first buyer.
I'm buying Garmin today.
That's fair. That's fair. All right, Emily, you're up, dear. You had a couple of stocks that you wanted us to talk about here today. On Tuesdays, we usually play a little game called Would You Rather, locked in. We have different versions of it. But what you got there, Em?
Well, Matt did such a wonderful job just going through the sectors and how we rank them in our scouting reports. And, having that extra day that we had yesterday with the markets not being open, I really did spend some time really looking to see what I wanted to play this week. And of course, my eye was in the energy sector for obvious reasons, right, that Matt explained, and also in the financial sector. So I brought two picks, one from each sector. Mm-hmm. And we can start with and look at the, if you look at the charts of XLE and XLF and just how they broke out today, really, really similar in terms of how they broke out today, right? So, and that's kind of like, that's the area that I was kind of looking for. So if we start with XLE.
Honestly, I mean, they're so similar. Like the only difference is the financial recovery was a little quicker in this range here.
Of course.
But this stuff here is about identical.
That stuff there is really identical.
They're both pretty sexy.
You know why energy has been lagging is because of what we with the virus and everything shut down. So
energy
is playing catch up. Financial doing a little bit better. We all know that. So but yeah, that breakout that it literally looks identical. So I was looking for plays in both of those sectors, and I had a couple of choices here that I wanted to run by you guys, and you guys tell me which would you rather. So if we look at the energy sector, let's look at.
And I was just looking at their weekly charts real quick. I'd like that financial breakout quite a bit. Like it looks good. Go Em.
Like you pointed out, energy does have room to run, right? So if you not have energy, if you kind of stayed away from it during the pandemic, and now you're looking to add some energy stocks, this might be the time you might want to be looking to add some more. Maybe you already have something in financials. I don't know. So I'm kind of giving you guys some choices, right?
Guys, this is the 3-year weekly chart on energy.
Yep.
When Em's talking about that catch up, energy's been lagging the market for 10 years. And so when it has catch up, there's a reason this is such at the low point versus everything else at the high point, right? And sometimes that gives you a little, interesting.
Like, it just makes you look at it twice. Like you ignore it first, and then you go back, you're like, oh, wait a minute,
I kind of like it, right?
We all want to go for for the technology and the communication sector, but don't sleep on energy. It's got some potential. So let's take a look at Exxon Mobil, if you will.
Gotcha.
And again, even looking at Exxon Mobil and the ETF itself, kind of similar in how it broke out today. So I'm looking at Exxon Mobil here for a potential position trade. I'm not swing trading this. I'm going to be in it for a while. We're past earnings, so I'm just going to kind of start to ride this new trend. Don't see any overhead resistance. May have a little bit of choppiness there at 60?
55.
Yeah, somewhere around there. But for the most part,
it's fine though. I mean, 55 is nothing wrong. I mean, let's say you get on the breakout of, because the one thing on Exxon, because this was such a beautiful setup, right? This little flag based into the 9. I mean, that's just beautiful. Thanks 3-day weekend. Thanks for ruining a great aggressive trigger.
couldn't just open from where we closed on Friday and just continue with that uptrend. You just had to.
Like, if there's one thing Bitcoin will force the financial instruments to do of Wall Street, is to be open more than 6.5 hours a day. like Bitcoin was open trading yesterday, open trading on Sunday, open trading on Saturday. It's like, come on, lazy Americans, get your stuff together. This is a 24-hour market.
What's so frustrating is that I actually spent time yesterday. I had an extra day to prep. I looked at all these different stocks and I'm waiting for the triggers, and then nothing triggers today. I'm like, come on, like, are you kidding me? But
6.5 hours a day. That's how long the market should be open. I'm back complaining. All right, so Exxon Mobil, I love it, Em. Exxon Mobil. So
and we can just play the stock itself and just do basic buy the shares, do a cover call.
Position. Let's go stock. Let's go equity here.
So we can just do the basic good old fashioned cover call. You can never go wrong with the good old cover call, right? So cover call with that, and then the other sector that I was looking at, the basic cover call is buy. For those of you who don't understand a covered call, you basically buy 100 shares. And then you go to the options chain and look for some premium, some cash flow in that 30-day range. So we'd be looking at the March. And you can typically start with the 40 delta. If you want to give yourself some more wiggle room, you can go lower deltas, but 40 is like that, that threshold. We don't have a 40, so we're going to go with that 33, bring in about $1.22 in cash flow. That means we're selling the $55 strike. So between 52 right now, that's the price of Exxon Mobil, up to 55, got a nice $3 potential in appreciation plus the $1.22 in cash flow. Mm-hmm. Can't complain about that at all.
Love the resistance level you're selling at too.
Mm-hmm. Mm-hmm. Nice little cash flow, and you keep it moving, rinse and repeat.
Okay, so we got a position trade on Exxon Mobil to take advantage of the energy sector. Mm-hmm. And it is February, correct? It's February. We just had Valentine's Day. Hey, man, you didn't mess up Valentine's Day, did you? Okay, so I didn't mess up Valentine's Day this time, by the way.
Oh, good. I still have some chocolate covered strawberries.
I usually mess it up.
I'm still dabbling with some chocolate covered strawberries, so everything's good here on my end.
I usually do mess it up. I do, but I did a scavenger hunt this time, man.
Oh, nice.
I did a Valentine's scavenger hunt. Tim needs to step his game up.
Did you really?
I did a Valentine's scavenger. I did. I thought about it.
I am proud of you. Very well done.
Yeah. We've been married.
I celebrated Single Awareness Day.
That's fantastic. Yeah. That's a fantastic holiday too. It's called 365 days a year. So I had to. I'm sorry. It was just one of those. Okay, so we got a position trade.
It's fine. It's just mean, man.
It's just mean. I'm gonna cry.
You're gonna make Mark.
Mark could have been.
I wasn't meaning it mean. I wasn't meaning it mean. Uh-huh. But anyways, we have a position trade on. Let me make sure. Exxon Mobil. Okay. Uh-huh. So you're carrying for a few months. At minimum, you're carrying through a few months.
Yeah, I mean, at least 30 days, if not more. Okay. But yeah, for sure.
Now, you also have positive seasonality right now. And Mark, I know like seasonality for you and I, we don't give it a lot of credence, but at a minimum, does it give you any confidence? Because I know it gives me a little.
Listen, it's one of those bonus things, right? Yeah, I would never make a trade on seasonality, but the fact that it's there, hey, nice little bonus, right?
Yeah, and so you do have positive seasonality in the energy sector, specifically in the months of March and April and May as you lead into those heavy utilized summer months. And so you do have that positive seasonality to help that there. Love the $55 call option sold, right? And when you're talking about Exxon, number one, even if everything works out, you could see Exxon literally consolidating, retracing here, hanging out, capture that cash flow. If it does break 55, so what? You bought it at 52, sell it at 55, make $3 on the stock, cash flow the $1.20 on the option. You made $4.50 basically off $50. You made 10% on an energy play in less than a month. Seriously?
Your river.
If you don't brag about that, if you complain about that and not brag about a 10% move in energy in a month, come on. Right. Love it. Gives you a lot of opportunity above 55 too, because you're selling the 55, which means you're maxed out at 55. But technically, I would say you're maxed out at 55 right now anyways. technically. You're going to be range up at 55. You're going to be overextended against the current trend. So I like that. I like that 55 sold. Above 55, that's one of those things you open up that risk graph and leave it you unleash the Kraken a little bit. You let that growth opportunity above 55. I'm with you on Exxon here. What's your alternative though?
No, don't say yeah, because this is a would you rather, right? So here's your other one in the financial sector. So once again, kind of same scenario broke out just like energy did, and I'm looking at DFS, Discover.
Oh, that was the one we were just talking about, the recovery with the high. Okay, I'm with you. Go ahead.
And it was between this and COF. So if you want to take a quick look at COF, it was between that and COF. But I went with Discover.
I like them both.
I know. I had to pick one. I couldn't bring both. So I went with DFS because DFS had that.
All right. Technically, let me get Mark and Tim's take really quick on it, just technically.
Okay.
Do you prefer the strength of COF at the high base that it's already reclaimed the previous pivot, or do you prefer the little recovery high base play catch up play here on DFS?
For me, from a timing perspective, I think DFS is a little cleaner here on a Tuesday. Obviously, the strength is something you can play momentum on. I'd pick DFS. I like this little pattern developing here.
Mark, I like DFS too.
Yeah, I think I'm on. I think I like DFS a little bit more. Okay, so you pick DFS as well. All right.
Go. So again, simple technical analysis. You can see that high at 100, high basing at that 94 price range. So it's a quick move to 100. So with this one here, I wasn't thinking more of doing any stock positions. I was thinking of playing the option, and we could do the modified covered call and look at perhaps maybe even doing a poor boys cover call, or just go bull call and just play it directionally, but still as a position trade.
You know, I honestly, if you're looking at it from a swing trade, I love the $100 target. If you're looking at it from a position trade, I think you're targeting above 100 here. Mm-hmm. So swing trade, I love the quick hitter to 100 here, and it would have to be aggressive, and it would have to be literally right now. Like this is, if you're swing trading that aggressive style, you see that cash open, you see the retracement, you're threatening a breakout against the intraday. I mean, it's that swing trades now, or it's not never, basically, right? The position trade gives you a little bit more flexibility and patience and whatnot. So, okay, so we're going to dial this in. Swing trade with the intraday breakout, quick trip to 100 on DFS. I don't think we need to spread it up. I think we go straight call here, guys.
So a call on DFS or a covered call on Exxon?
I don't think the volatility is where we need to offset that. I mean, 48% volatility, guys, is historically high on Discover, but it's not historically high for right now on Discover. Like this is pretty normal for the marketplace.
Well, and just look at the cost. I mean, if I pay $6 for the in the money or at the money call option at 50, you could play either that or the 97.50.
$5.20.
$5-6 on a $95.
Yeah, and if I did a spread, it would be something like a 97.50, 115, right? I want lots of
less than.
I was actually looking at the 95, 115. If we were going to do a bull call, if we were going to spread
on the spread 95, 115, I probably do the 110. Like the 95 by 110, even the 97.5 by 110 makes sense too. I don't mind the 95 by 115. I just don't think you're bringing in enough. You're only bringing in like 18% to offset that. I think if you are looking spread, and I know this might be a little bit more advanced than some people listening, but you know what? That's what happens when we talk option strategies. So when you're looking at this here, when you're looking at a bull call spread, you want to get somewhere around a net average of 25 delta with a 40% cost reduction, right? In that ballpark, right? I mean, you can modify whatever the numbers are, but in that ballpark. And so if you look at the 48 and you sell the 110, the 48 delta, and you sell the 22 delta, what does that get you? 26 net delta?
26.
Okay, and if you buy it for say 530 and sell for 180, you're offsetting about 35% on, like, I'm just ballparking numbers here, but it's close. It's close enough. And again, that's pretty much where you're going to get with implied volatility at 48. So if you are looking at the spread, I'd probably look in that range. And I was just doing longer time frames here for the position, because this would be a little bit longer time frame. So I kind of like that. Now, if you're going to go,
we go straight call.
If you go straight call, honestly, let me just, if you go straight call, you buy the $100 strike price.
I mean, that's where we're targeting.
I mean, you're targeting 100. Don't get me wrong. When in doubt, I always go 50 to 60 delta. But I mean, you got a ton of open interest right there at 100, and that's going to be a little tighter. You can probably tighten that up there. You're fine at 97.5 too, though. I don't know. I kind of like the simple trade. I kind of like the buy the call swing trade on Discover versus the covered call position trade on Exxon here.
Now, here's an interesting caveat. Obviously, as we're looking at this chart on the intraday, it just moved like $1.50 in 5 minutes. The second we started talking,
I think tackle just triggered.
Why we were talking about
like
it.
literally after I said it's got to be now.
Well, look at the volume.
like tackle. I mean, my goodness, what are you doing, guys? I mean,
until the show is over before you tell us.
Let's finish the analysis. Let's do the would you rather part of it.
Yeah. This is an interesting one. I'll go first on the would you rather part of this.
I think we just got our answer, bro.
You're going with Discover.
I already own Exxon, so now you've got me thinking maybe I should write a call against it after the pop that we've had on it, because I don't have it covered as of yet. So I'm thinking through that just from a personal perspective. I like the Exxon cover call. If you can get that kind of return on a cover call on Exxon Mobil, who's a dividend paying company, that's the market we're in. It's a beautiful thing for cash flow traders, but I prefer DFS here. I like the chart setup. I like the technical setup. I think the bull call spread through Delta is a good way to play it in a market like this. You got limited risk, limited cost. You can get the access to it. Still got 60 days. Yeah, I think DFS here is.
I like the DFS quick hitter to 100. I think it's a good play. You got strength in finance to start the week. This is a clean breakout on the daily chart at 95. The intraday had the snapback and then just basically destroyed the snapback. So I you know, you never know because the market's fickle, but this feels like it's $100 by like Wednesday.
Yeah, it's looking good. Marky, Exxon.
I'll hedge my bet Thursday.
I need a minute. I'm trying to place a trade on DFS.
I'm not
that was Mark.
I'll wait until the.
I don't know if I've had a more accurate. It's got to be right now. If like that might have been the most accurate I've ever had.
Yeah. All right, very good, Emily. Really good. Two different setups. I like it from two different sectors. Fantastic job today here from the Queen. I think now we're going to move into cash that
Which
makes
one did you
trash.
prefer?
I think you said DFS, right?
DFS.
Looking to put a trade on right now.
Mark, you agree? DFS?
Yeah.
Yeah, but
I love oil. I love finance. I think these are the two areas.
You have a lot in oil already, though.
Yeah. I don't have a lot in finance.
Yeah.
So
I like the quick hitter on DFS.
All right, Mark. No more delay. It's cash that makes trash.
Good picks.
Oh my goodness!
Emily.
Listen, you're wasting all my time up until this point.
That was on purpose. It's called the filibuster.
Listen, I got a little theme song, so apologies to all those who actually have musical talent, but I got a little theme song based on all of your talk for trash that makes cash. It started with a penny stock. And now my account rocks. Matt and Emily hate my picks, but look at that uptick. Take me to your love shack. Penny stock always got your back. Now it's time for trash that makes cash. There. Let's go look at some upticks.
We're not just going to move on from that.
I think we can let it sit for a while. I mean,
Yeah,
I
I think
like
it's like a fine wine, right? I mean,
moment of silence here.
Yeah, somebody just died. No, that was awesome. What are we talking about? That was fantastic.
Good job, Marky.
So now whenever you hear me say,
Monday,
look at that uptick,
That
me
is
talking trash to
awesome.
you.
It was good. It was good trash talk. I did enjoy
All right.
it.
So a month ago,
That was awesome.
on the first trash that makes cash, I had 3 picks. I had AMC, which we no longer can do because it's above $5. We had SOS.
Yeah, that's why we can't do it any longer.
We had SOS, and pull up that bad boy chart. That was just a little bitty tiny bit of a
I made somebody some money, Chucky.
And we had AHT, and I want to revisit AHT because I love AHT. I love AHT quite a bit. I like reopen. There's a couple areas of the market. Energy and finance are no brainers in my book, but I still believe
Tim's got to do it.
I was waiting, but let him get through.
I will just say earnings. He can absolutely.
I'm sorry, Tim,
let me tell
this habit forming.
Let me tell you what the earnings were. They were terrible. Like every reopening play from the last year, earnings don't matter. This is a long-term play.
Yeah,
this is not a swing trade play. This is a position long-term. A couple areas of the market I really like. I like oil. I like finance. Those are no-brainers, and I like beaten up stocks that need people that haven't had price appreciation yet. That's another area. This is why I like Trivago like I did, and Trivago's had a nice little stretch in itself. I like AHT a lot here. I think this is a longer term play. I think there is a lot of price recovery. When we first talked about AHT a month ago, it was about 270. You've had some upward movement, nice little 80-cent move in it. I think there's a lot more to go. So everyone, AHT, you hated it a month ago at 270. Is there anything in the technical pattern that gets you excited about it today?
You lost me at technical pattern.
Let's see what technical pattern.
Well, they're called breakouts.
The basics behind this are that you believe this company will not go bankrupt, correct?
Well, they got so much financing, like they got literally enough financing to carry through them for years.
Well, that's what I'm saying. This really isn't a technical setup, right? So this is more
the trash that make cash I bring you very seldomly have technical setups. They have theme-based, sentiment-based things behind them that I believe in. I think there was a lot of worry about AHT for a while that they would go bankrupt.
All right,
they got a massive boatload of money to carry them through.
Like trash that makes cash, like obviously we break down some technicals, Mark, but I mean, you started talking about the thesis starts with, I don't think this company's going bankrupt, right?
Well, they're not going bankrupt, but that was part of the worry about them previously.
Their numbers are concerning though, right? I mean, you're talking about a company that started showing a loss during the pandemic, but obviously was going far downhill before the pandemic, very downhill before the pandemic. You're talking about a company whose earnings went from, 30 cents to 20 cents to 40 cents to 30 cents before the pandemic. During the pandemic, minus $12. Like that's a destruction of all things company type number. You're talking about a company that before the pandemic cut its dividend by half from 12 cents to 6 cents during the pandemic, eliminated it. So I understand just from a numbers perspective, companies that do this, they are worried about bankruptcy.
Like and there was that concern about bankruptcy, but they got so much financing to carry them. You'd literally have to have
the positive.
COVID play.
Let me finish the positive. The positive is it doesn't get worse than that. Like that's a death dealer to this type of company. That's a death dealer to trash companies, and this is a trash company. So, but look at the slight recovery. You'll probably see a little bit of an uptick over here as well, right? So things have improved from an earnings perspective. I'd have to look into a company a little bit more from a fundamental perspective to add any more to that conversation. Technically here, You had a pop after earnings. This could have been market related. It was after the election. We had a lot of euphoria there. Been stuck in the mud here. Are you looking at it now, or are you looking at some degree of triggering mechanism above resistance, Mark?
I add every week. So
okay, so this is just something you're just adding to over time?
Yes.
In preparation, all right?
Yeah, like I take profits from SOS and I add a little to SAHD.
Yeah.
That's
gotcha.
Just what I do.
I personally wouldn't touch it underneath the 200-day moving average. But I know what you're doing. You're not taking your hard-earned money and going park it here. You're taking profit from other aggressive areas of your trading to stick it here to compound those gains, correct?
Yes.
Okay, so I don't mind that, but new positions in this company should not be taken based on like your savings money. That shouldn't happen. This is trash that makes cash, which means you should be taking that money from other areas of the market, in my opinion. But I wouldn't touch it underneath the 200. But Mark, if it gets above the 200 and you're pretty tight against that, I mean, the 200 is right there around $4.
It is.
I think you could see something. I think you wait for this earnings though. I do. You got the worst case scenario here, bottom fishing there. Can they improve upon that 4 number? You could see a pop above that 200. I'd be patient here. I don't think I would touch it underneath the 200.
And it obviously could pop and run, but even since the last earnings from 127 to 350, we've almost tripled heading into this earnings, so from bottom to here, it's done. And I remember you bringing this one, Mark, up when it was like a 250 stock, right? So it's had some price appreciation here as it's kind of consolidating up near this 200 period moving average. I'm with Matt. I think you got to catch a breakout. And I know the naked put premiums are juicy. That's kind of what you've focused on, Mark. Is that right?
Yeah. Well, there are two things, there's like, and they're not as juicy as they used to be. Those used to be 60, 65 cents on those marches. Yeah. I do two things on this while I wait for a breakout or a move. I own shares, sell the March calls. I got 37 cents for them this morning. On down ticks, if those premiums get better, you'll probably have April ones next week, and those April ones could be 40, 45 cents. But I'm playing it in a variety of different ways. Love the stock. It's treating me very, very well.
I'm a wait.
I think unless you're Mark with a vast amount of experience selling puts in these type of companies, that's the nicest way I could put it. You shouldn't be touching the options in this area of the market. Full stop. Unless you know exactly how to navigate that. Those option chains, guys, these are giving me like a nostalgic moment here, because these are option chains when I first started trading. Yep. Two and a half strikes against a $4 stock. I mean, just good luck. You can't do much with them unless, again, you know what you're doing. And then all management techniques kind of thrown out the door, because you need the price at a specific point on the chart for you to do that. That becomes very difficult. But the beautiful thing about trash is they're all cheap. Buy equity. You don't need to. You don't need. You don't buy options. You don't need to do the options here. You buy equity. That's what you do. So I can see it, Mark. Above 4 makes some sense to me. The bottoming. Obviously, we're not. If we didn't have massive fundamental concerns, we wouldn't be calling this a trash company. It's trash for a reason. Right. But I could see it above 4 here. That's the best way I can put it.
Look at that uptick. Let's go to another. Love energy stocks.
I try to be positive on it. Like
I was going to bring up, I wanted an oil play for this segment today. I was going to bring up BPT, a nice trust. And if you get a BPT.
BPT.
Yes. It's a nice royalty-based company. Ran a little bit on the breakout here. I would like to get a better pattern. I love the pattern heading into the weekend.
It was really good. That pattern was really good coming into the today.
So I mean, put it on your watch list if you get in pattern. I think there's upward movement on BBT. But go to KOS.
Hey, do you have any interest in a day trade 4-6 to 5?
Dude, this is all position. This is stuff.
Well, I know. I just dropped it down to intraday, and I have
never placed a day trade on a royalty trust in my life. If you're ever going to.
Never. Yeah. Well, if you're ever going to touch these, I guess.
But there's room to run on the chart. Obviously, oil. There's so many different ways to play oil. But the pick I got for you is KOS. Didn't run today. KOS. You know, just one S. You know, it's like KOS, SOS. I can make all of the OSs. You know,
Don't do it, Tim.
I was gonna do it.
Don't do it, Tim. He wanted to so bad.
All right.
Don't call my penny stocks.
I saw the eyes. That's not what he was gonna do. But
a couple of things. One of the reasons I like XLE, the ETF, the things I'm looking for in oil stocks right now are stocks that have breakout signals that still have a lot of room to run up to those pre-COVID levels.
Oh, what was your symbol?
You know.
Oh, it wasn't legitimately POS?
KOS.
Oh, KOS.
And so, I mean, I'm looking for that 1-2 punch in oil because once again, if there is a super cycle, if oil runs, everything's going to run. It's just what is relative to another, right? But for me, I'm looking for a 1-2 punch of, do I still got room to run to those pre-COVID levels? And do I have clean entry signals? I think we got a clean breakout level here, potentially a three.
I kind of like this, Chucky.
No, I mean, I spent a lot of time on energy because I knew I was going to be adding to portfolio.
I think a lot of people are picking their best energy play here this week. I mean, obviously, Emily and a lot of people are looking at Exxon, but energy's running. People are going to play in energy and finance this week.
Mm-hmm.
One of the obscure trash picks underneath $5 penny stock analysis. Chuck, you got a fairly consistent little breakout channel at 3. You got something a little bit north of that, but that's 10% above it. That's perfectly fine. After that, I mean, there's nothing really here to forward. The only concern I have is obviously what Tim was going to point out, and that is earnings coming up here fairly tight.
You couldn't let me do it. I
couldn't hear it for the 48,000th time in the last week. No, I couldn't.
Once again, and earnings do not bother me in this
and that's what I was going to ask, Mark. That's what I was going to ask, because obviously in the areas of the market that I focus in, earnings are extremely important and would most likely stop this trade from happening. From a swing trade perspective, not necessarily from a position trade, but from a swing trading perspective.
Yeah, and commodities is one area of the market that I don't care about earnings because I have known the price of the underlying commodity for the previous 3 months.
Well, then on that front, then, do you like this one more than RIG? Because one of the reasons why I didn't bring RIG is because it's down at these prices. Transocean, old company I used to trade for a decade, quite frankly, RIG. And it has earnings in front of us. So I was like, all right, so I'll leave that one off because
I like RIG
earnings,
Yeah, I guess it's up to the beholder here, but like earnings would stop me here, even in this area of the market, because I see way too many things with earnings that you just can't control.
Yeah, and if these were swing trades, I would agree.
Position is a little bit different.
Position, longer term holding.
Yeah, you're holding 3-6 months here, right, Chuck?
Until I get called out.
Minimum 3-6 months, or until your call option gets hit. And that's right, T. He's doing some option stuff with them too.
The great and powerful RIG was once $163 a share.
Man, it makes you realize that these companies don't have to go to $160 a share again. I see it, Chucky. I totally see it. Just that earnings kind of gets me a little scared.
Yeah, no, I mean, like there's lots of ways to play energy right now. Lots and lots and lots and lots and lots.
I'll tell you though, like we make fun of trash that makes cash because that's what we do. It's just we're gonna make fun of penny stocks, but I mean, give credit where credit is due. A lot of Mark's calls the last 3 weeks have been rock stars, guys.
You have to acknowledge it. I mean, there's no doubt about it.
You have to acknowledge it.
Yeah, you have to acknowledge it.
It's still crazy train, and it get flipped on its lid and like quicker than an Allen Iverson crossover. But Mark, great picks the last few weeks.
No, and the thing about SOS, somebody asked, well, what do you do with SOS? I'm like, dude, that thing's gone parabolic. I have no idea. Your guess is as good as mine. I knew it was a great play at $2. Now that it's at whatever, that's left. This is now left you guys. This is in your world now.
It's in the GameStop world.
You know, so
trade accordingly.
Yep.
All right. Lots of little places.
What a call though on SOS. Oh my goodness, Chucky. What a call. Pat yourself on the back more than you normally do.
He was ramping at it 2 and 3 as well. So
dude,
look at the volume.
I pat myself on the back so much. If I turned around, you would see a bare spot on my shirt. I've worn out
this time's legit, bro. What a call on SOS. Great job.
So flash through the 3 he had here. Let's review them. We had.
I've only had 2 here. I've had KOS and AHT.
The one you
got the Energy KOS.
Okay.
That breakout of 4 is clean. Very clean. Or not 4, 3 is very clean. The only concern is earnings, and if you're positioned, you're going to navigate that. And the other symbol, really quick, Chuck.
And the last one is very boring play, MITT, mortgage REIT. So there's a theme in all of these. These are all companies that got beat up in the pandemic, still price recovery. This is a boring mortgage REIT. This is not going to, I mean, this is never going to be an SOS. This is never going to be a Trivago. It's not even, it really has the potential to be like a Chico's, who I think can take off. But there's not, once again, I like boring, steady, and I think that as, once again, economy moves healthy, I think this is a slow, steady trodger. Beat up, still stable, not exciting, but not every play has to be a potential double, triple, quadruple bagger, right? Like I like MIT for steady price appreciation in the coming years. I think it is setting up well for entry points. It's fought some battles in recent months. I think there's a lot of clear air to the top of the chart.
If I had to pick one, I'd take the energy play over the REIT. I like the pop. You got the same risk to earnings. But like I just like the potential on that pop on the energy play a little bit more.
I love energy. You're gonna get me to complain about energy picture.
Plus REITs.
Mm-hmm. Dude, REITs.
Like anybody?
Listen, REITs.
Anybody?
There's a couple REITs down here at the bottom, obviously.
Anybody?
No, not really. Emily, any of these grab your attention?
No.
You're trading that Bank of America.
Emily
DFS.
hates my picks.
Emily's like,
but look at that uptick.
Yeah, and here's Emily. I got a swing trade on Discover. I got.
Listen, Emily. Listen, I am like.
I'm trading Exxon Mobil. I got some bull puts on Amazon. I'm retiring on Apple.
I'm waiting on Netflix to wake up. I mean,
yeah,
listen.
No, it's
every week I am like Santa Claus, and I bring this big bag of cash to give to everyone. You know, you are obviously on the naughty list and just not going to take any. You're not going to take any, but big bag of cash and tries to make cash every week.
Maddie, did you have any trash that makes cash?
And yeah, let's all overreact to the one bad joke I gave to Mark earlier today. Man, that man deserves a lot of those.
We just have to bottle him. You know, he's Pat. You know, listen. You got to give him a big virtual hug right now.
We can't talk about SOS the rest of the week, or his head might explode.
If you're ever worried Mark's down, just bring up Trivago, TRVG.
We didn't even talk. I mean, we didn't talk about Trivago, you know.
Here's what I like about it. The segment I like because there's interest here, obviously in this area of the market, and even though it's not going to get me or Emily very excited, it's not going to get a Tyler very excited. That's the beautiful thing about this marketplace, is that there's something for everybody. And so even though it's not for me, I'm never going to be the penny stock guy ever, like literally ever. I might start hugging Jay Powell before I become the penny stock guy. I just don't agree with him. I think there's better ways to approach the market, but that's the beautiful thing about the market. There's a lot of ways to make money. 1,000,001 ways to make money in the market. And like I said initially, Mark's been on fire in this area of the market. He eats, sleeps, and breathes this. I don't even know how you do it. I don't even know how you live on those message boards and not literally go insane all the time, Chucky. So
right, listen, I'm having the best start of a trading year.
Listen, I can't do it. I can't spend time researching this area of the market because I know what you have to do to research this area of the market, Mark. You do it.
big shout out, big thanks from me to you, and I'm sure everybody at Tackle. Thank you, Chucky, for putting in the time.
One last thing, will you pull up Chico's real quick?
Hanging out in the mud.
Because we brought up Chico's last week at 240. CHS. You don't have Chico's.
I don't know your symbol, bro.
But we brought this up at 240 last week. I loved it.
Chico's is Best Buy. Like,
what do you think about the signal potential on here? If you missed Chico Party at 240,
I think you missed it.
I think you might have missed it too.
I think you missed it. The trade was done down here. You do have a secondary, but this secondary setup is not the same, Mark. You have a deeper retracement that came into the 20-day moving average. That trigger had to be done as a bullish retracement, and that is right here. You wake up a week and a half later after price appreciation in a bullish retracement, you might as well stop trading and go get a different job, because that's not going to work out for you long term. So no.
Don't feed him. Don't feed him right now.
It's like feeding the troll. Like, you'd never feed the troll, right? Feeding the pigeons. Do you ever feed the pigeons?
No, you shouldn't.
No, you don't feed.
Maybe I have.
Not from Utah. You don't feed the pigeons.
You don't feed the seagulls either.
No. Yeah, unlike those pigeons, whether you feed me or not, I'm still coming around. To try to get fed, so.
This is true. But seriously, guys, he's had some amazing calls. We'll see. This week a little different. You had a couple of earnings things, but great job. Like the picks.
I got one. VBIV.
Which one?
VBIV.
It's weird when they have a V, a B, and a V in it. Go.
Problem here. Don't know much about what this company actually makes. Biotech firm, $3 stock.
Nobody else does. The other 20 million people trading this company today.
I did some scanning down in these price ranges today, and I like the trend development.
I like that it has the word vaccine in it. That's what I like. I got one. Like, literally, apparently all you have to do as a penny stock is put vaccine in your headline. We have a vaccine. We're not going to tell you what it's for.
Mm-hmm.
It's just a vaccine. We just have one somewhere in the storage in my mom's basement somewhere, because that's where this company's being ran out of. TRVN is mine, and I just found it because Tim told me about it, and it's a bullish retracement, and he knows I like bullish.
I like that floor level at 220.
Mm-hmm.
That would violate the reason you were looking at this trade right now. Hammer candle sitting at support,
Cody special.
Kissing the previous. It is not a Cody special. Kissing the old reversal breakout channel at 2.4. Hammer coming off that strong. I like the technicals, guys. What do you guys think?
Yeah, it's a good chart. That's it. I mean, that's all. That's the problem with these companies. I mean, either you're willing to play the chart on technicals alone, or you got to dig into the fundamentals of this company. I have not done this with these stocks yet, but I like the chart. I like the
TRVN actually was on my to-do list to dig into, so I will go dig into it.
Here's what I like about it, Mark. Unlike a lot of the other stuff we look at in this space that has some inconsistencies with technical analysis, would you agree with that, by the way? There are inconsistencies.
Oh, yeah, no, you don't get very many clean charts.
All right. This one is fairly clean, right? This one's fairly clean. You don't have to deal with a lot of gapping situations. You see a fairly clean trend here, a fairly clean pattern, double bottom, double top, breakout, close against the high. Volume pattern is good here. Increasing volume during the upward movements in price, decreasing volume during the downward movements in price. Width candlestick is consistent here as the body of the candles in this downward movement of price get narrower and narrower and narrower. And then finally you come into support in between the rising 20 and the rising 9, coming into that horizontal resistance, breakout channel at 2.4. And then you look at this on an intraday basis and look at that 2.4 handle on the intraday basis. I think there's a lot to like here from a technical perspective. And that's why I wanted to bring it. Obviously, I don't live in this area of the market. I live in technicals. I like the consistency in technicals here. What do you guys think?
I like it too. Yeah, good reversal characteristics, good pop on the pivot, increasing momentum, volume, everything you just detailed. From that alone, I think it's definitely
keep risk. Cheaper S, get a stop loss underneath 2.4. It's an easy stop loss placement. Triggers above the high. You're targeting 3.
Beautiful. All right, guys.
What do you think, Em? You going to wade into the muddy waters of the trash and cesspool that is called the Atlantic Ocean?
I need more time. I need more time to
I needed 3 weeks. And now I'm sitting here breaking down the technicals on a penny stock.
I need more time. Maybe I'll subcategorize my speculation, part of my portfolio, and maybe allocate a small portion of that to this. But I still need more time. This needs to cook in my system for me.
You can
I know, but you like the technicals though, don't you?
She does. She likes blue chips. If you don't put a blue chip on her screen now, she's probably going to revolt.
Emily's the individual that on Twitter, she will only communicate if you got the blue check mark.
Yep.
Right.
You got 300 followers. She's not talking to you. That's a penny stock.
See, Emily doesn't like trash that makes cash. She wants class that makes cash.
There
she wants
you
those
go.
high class stocks.
That's class.
Listen,
for
hey,
cash.
money spends. Money spends.
We're not going down this debate rabbit hole at all.
I had some. I can't say what I was in my head, just barely. Tim was right to move on.
That's right. Guys, that's our show. Let's start wrapping it up here. Tuesday, first trading day of the week. Obviously, the markets. Let's go back on the ES while we just do final thoughts and whatnot here. Kind of wrapping up the show. Emily, thank you for being here. As always, appreciate you coming in, giving analysis. And I love the 2 picks you brought. What are your final thoughts for the team out there, Em?
Final thoughts. This week we have our monthly Women in Trading webinar. So ladies, I look forward to seeing you on Friday.
Oh, is that Friday? I didn't know that.
It is this Friday at 8:30. So I will see the ladies there. I don't know what I'm cooking up something for you guys. Maybe if Mark is nice to me this week, I'll bring us back for you on Friday, but very unlikely, but we'll see how the week progresses. But we will.
I feel like a preacher that is trying to convert slowly to my degenerate underbelly world.
Might convert me by Friday. We'll see about that.
You're trying to convert the Pope there. That ain't gonna work, bro.
Listen, go big or go home, man.
Yeah, but listen, the Queen's first trade was Amazon. You're not doing that.
And then Netflix.
Listen, she is just being nice to me. I know that.
Happening.
She is not going to trade this trash. I'll tell you that is
not going to happen.
It's not going to happen.
It's never going to happen, I know. But man can hope.
There you go. Mark,
Emily is a refined woman. She is not wading into this cesspool of filth.
I come from happening. I am queen in Africa, so I do not touch these.
See.
Listen, my final thoughts are very similar to what I have a lot of times. Listen, this market is, it seems like it's bulletproof, right? Like it seems that no matter what you do, from a cash flow perspective, it feels like it's printing money. I do know that's not always the case, and I have to remind myself all the time, be responsible. I read just while the halftime when I was seeing if there's any news things that break, Bank of America basically issued a thing saying that, investors are taking on higher risk than ever before in the history of the market. I do not want to be one of those individuals. I don't want you to be one of those individuals because market corrections can happen really, really, really fast. And so happy making money, happy making good money, but do not be over leveraged. Be careful. Just don't be one of those individuals that are part of the record, taking on more risk than anyone in the history of the markets before.
Mm-hmm. Matt, final thoughts from you, sir.
Oh, big shout out to both Em and Mark here today, bringing in, a little bit of would you rather from the finance and the energy conversation with Coach M to the trash for cash. Trash that makes cash, trash for cash, trash that makes cash, right?
Trash that makes cash.
And Mark, really appreciate the time you do spend, because this market is a big market and there is zero chance that you can cover the entire field, right? None of us are that fast as
in all seriousness, Matt, what gives me the ability to do that time is that I know that you and Tim and Tyler and Emily and Marquise and Gino and Cody are and Frank putting in so much time scanning trade picks. Because this isn't the only thing I trade, but I do
no.
know that being part of a
Lots
community, if there's a great trade like on Discover, or there's a great trade, I know you guys got my back, and you got everyone's back because you're going to produce those picks. And so, because you can't do everything, right?
I honestly, Mark, I love it. I love the fact that we tag team a lot of this to tackle, and I handle a lot of the earnings stuff. You handle a lot of the underbelly. Tim keeps us focused and actually talking consistently in a straight line sometimes, which is the most important and most difficult job when it comes to
Are these straight lines?
No, we jack all the time. We zig, we zag, we go everywhere. Somehow all of a sudden Tim's bringing us out of the black hole of a tunnel. And it's like, oh yeah, that's what we were talking about. So I just really appreciate, Emily today, you, Mark, Tim, you. I mean, let's have a great week at Tackle. Everybody trade accordingly. The market's breaking out. We got a lot of activity. The scouting reports were amazing coming out of the weekend. Last week I feel like we've been on point here. We got a good read on this market right now. Let's just keep navigating it together, guys. And if you need any help at Tackle, obviously you can always email Mark at Team at Tackle Trading. You can go out to the Facebook group, get help over there. You can hit us up on Twitter, or be in one of the many webinars we do for our pro member community over there at Tackle Trading every day. So if you've been sitting on the sideline, you've been waiting for a community to find, you found it. This is the place. Now it's time to be a part of it. So if you've been wandering the financial landscape and you've been looking for a home, come join us at Tackle Trading. We'll navigate this together and have a lot of fun along the way. Outside of that, Tim, Team Tackle, have an absolutely great day. Check out the podcast. Make sure you download the podcast. And for those of you that want to spend a little bit of time, and we appreciate that very, very much. So, guys, we're trying to get the podcast out there a little bit more. So if you can give us a nice little 5-star review on iTunes, that'll help us compete with the big dogs out there. We're a small company. We gotta get some help out there with the Apples and the Googles and the these big tech firms. Sometimes it's hard to get your name out there. It's hard to get your brand out there, and you compete with a lot of content out there. So if you do want to help out the podcast and it helps you navigate the market or entertains you a little bit, definitely go out there and if you would, give us a 5-star review on iTunes. That would be appreciated.
Fantastic. I love it. Love all the takeaways. Love the final thoughts, guys. That is our show here for Tuesday, 2/16/21.
Jonathan, very quickly. No, because I love Jonathan. He asked me to look at US Steel. US Steel was fine for its life at 16. We talked about this last week, Jonathan. You got what you wanted. Is there a new trigger here? No, there is not a new trigger here, but it did give your death sentence a little bit of reprieve in the short term. Good big uptick on Steel. If it can reclaim the 50, 20's not out of the woodworks. Any new trade on US Steel would start with a high base at 20, in my opinion.
Looking good. And we talked about that one at length last week about that, support at 16. Looks like it did hold here coming into a Monday, at least for one day.
No, yeah, but that's important. A lot of people invest in Steel. A lot of people like cover calls on Steel. That is important because a break of 16, and it certainly still could do it, but it's not going to do it right now, and it's not going to do it tomorrow most likely. So 16, you got your 1 day reprieve. US Steel had a death sentence called underneath 16. At least you got that reprieve for a day. Let's see how it navigates. But again, I think any new trade would start with reclaiming that 50-day moving average and see how it navigates between the 50 and that 20 handle.
I like it. Like it a lot. All right, guys, we'll be back tomorrow. Same time, same station. We go live every day. The markets are live, 12:30 p.m. Eastern Standard Time. If you are new to our channel, you've not done it yet, subscribe, click the bell, and come back and join us. We're out.